Virtual assets. What precisely has to be according to the IRS? Investors in digital assets like cryptocurrency associate-agreed non-fungible tokens are on a wild ride these previous couple of years. Once all, the value of one Bitcoin 0.0% hit an incomparable high of over $65,000 in Gregorian calendar month of 2021 before sinking to around $20,000 in Gregorian calendar month of 2022 and staying in this berry ever since. Within the meantime, the worth of the many widespread non-fungible tokens has borne sort of the rock or been erased completely. Thereupon in mind, many crypto investors won't ought to worry regarding paying taxes on gains this year. With costs cratering investors huddling on to ascertain higher days, many won't have associate degree accomplished gains to claim. That said, investors who sell or use crypto and NFTs can still face plenty of situations in 2022 that need coverage to the Interior Revenue Service. You will have even detected an update on the 2021 Kind 1040 from the IRS that asked this terribly specific question toward the highest of the page last year. At any time throughout 2021, did you receive, sell, exchange, or otherwise get rid of any money interest in any virtual currency? You also can anticipate an up-to-date model of this query on the brand new Form 1040 for 2022. We recognize this due to the fact the IRS launched a draft of the form. The new query asks the following: at any time at some stage in 2022, did you receive or sell, exchange, gift, or in any other case get rid of a virtual asset? This big fear query is supposed to make shufflers remember different virtual belongings past crypto, including NFTs. It's additionally intended to be extra consisting of crypto earned as a prize via numerous projects, inclusive of play-to-earn gaming. Tax considerations for digital assets in 2022. But what precisely do you need to document to the IRS? This clearly relies upon in your stage of involvement with virtual property, in addition to the way you in the end promote or get rid of property you come upon this 12 months. According to lawyer Asher Rubinstein of Gallic Dreyer and Berkey, people who have obtained, bought, trade, gifted, or in any other case disposed of crypto, NFTs and different virtual property this 12 months will want to test the field that says yes subsequent to this query on IRS Form 1040. Depending on the extent of involvement, similarly reporting is required, he says. Rubinstein gives the subsequent examples of conditions wherein you will document your crypto involvement to the IRS, and no taxes on profits as a result. Example #1. You obtain charge in cryptocurrency. If you have been paid in crypto, this is taken into consideration profits to you, simply as in case you have been paid in US greenbacks or your reimbursement protected inventory, says Rubinstein. You need to document the crypto reimbursement in your profits tax form, IRS Form 1040. Example number 2, you bought crypto to a person else. Rubinstein says that is taken into consideration a disposition in property, simply as in case you bought inventory or actual estate. As a result, you're required to document to the IRS the capital benefit or loss from the crypto sale. To well document benefit or loss from crypto, taxpayers need to report IRS Form 8949 and Form 1040 Schedule D, which observe to short time period and long time period capital property, he says. Example number 3, you exchanged crypto or used it to shop for something, like a vehicle or a boat. Rubinstein says to assume you obtained Bitcoin for $5,000 numerous years ago, and now that unmarried coin is really well worth $20,000. If you exchanged that Bitcoin for a vehicle really well worth $20,000, you may experience like you are making a fair switch for two similarly valued items. However, the US tax code does not see it that way. In fact, they see which you earned $15,000 in taxable profits through the Bitcoin benefit. It's like buying $5,000 really well worth of inventory and promoting it for $20,000, says Rubinstein. Example number 4, you earned hobby in a crypto financial savings account. You nonetheless very own the crypto on this scenario, however you lended it to a crypto trade-in go back for a price. With crypto financial savings accounts, the price you earn is taxable profits, says Robinstein. Example number 5, you used crypto for staking. This is while crypto is located on a blockchain like Ethereum with a purpose to hold that network. The price of extra crypto is taken into consideration taxable profits, says the lawyer. Example number 6, you used crypto to buy an NFT. Robinstein says that NFTs are commonly sold with crypto, and this opens the door to at the least 3 capability tax events. First, you may be taxed at the benefit and cost from while you obtained the crypto and used it to buy an NFT. Second, you could owe taxes at the sale of an NFT in case you promote for extra than you acquire it for. Third, an NFT that generates residual profits can also additionally require extra reporting and taxable profits. What do you not have to report to the IRS? According to Robinstein, it is nevertheless viable to personal virtual property while not having to record a specified data to the IRS. You must record profits that you haven't found out or honestly acquired, he says. In different words, proudly owning a virtual asset at the same time as it appreciates in fee isn't a taxable occasion due to the fact you haven't but acquired profits from the appreciation in fee. When you promote the virtual asset for a profit, now you have found out the profits, and that could be a taxable occasion. If you lose cash making an investment in virtual property this year, it is any other situation in which you may not owe profits taxes. Through a procedure referred to as tax loss harvesting, however, you will be capable of offset up to $3,000 in profits made on different investments the identical tax year. If you are nevertheless stressed on whether or not you owe taxes on digital property, how tons you want to pay or whether or not you may write off losses in opposition to your taxable profits, operating with an accountant it is informed approximately crypto while you document your taxes can help.